You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, it's your host as always, and Merry Christmas to everyone. I hope most of you are on holidays right now listening to this, but one man who is not on holidays and is working up until Christmas Eve is Shane Beaumont from Haven. Mate, thanks for coming in, and I couldn't think of a better person to do a bit of a 2024 review, what's happening right now, because it's super interesting, the dynamic in Perth's market right now, and then a look into 2025 as to what's going on. First thing I wanted to say is congratulations on the new office and the new brand and everything. Can you give us a little bit of a spiel? We really do not do plugs here, but I thought it's not really much of a plug, but more just tell us, what's it like opening up your own new agency after working for other people for so long, being such a high performer? How do you feel?
Yeah, really privileged. Fortunately, we work with some really amazing people, and that hasn't changed. Obviously, Sean, some business partner, and also Jenny and now Claire. So just some really great people. And I don't really see it as opening your own business, because I think a lot of agents run their own businesses, but I think the collective energy working across so many different suburbs now, we've got 3 offices, a footprint across the whole of Perth, north, south, east to west. You get to see so many different things happening. I think for agents within that group, that's been really good, because as we were just speaking off air, certain areas are still flying, others aren't. So it's always good to get a good spread. So really lucky and privileged to work with great people.
Well, you've got HR issues now, I'm sure, right? You got over 100 staff, so you have to worry about more than just your assistant now.
We're fortunate, really good people and great managers, a lot of middle management, which make things much easier.
Let's have a look at that last year, and one of the benefits of being able to talk to you about 2024 or just the market in general is the volume of transactions you do, but also I think one of the best analyzers from a sales agent point of view in Western Australia. Whenever we chat, you go deep, you provide very practical data points and reasons as to why things have been going well, why this bit's not going so well, where the opportunity is, rather than just being broad. I love chatting to you because you give us really practical detail. So the first thing I want to talk about is just a bit of a review of, if we think about January, February, March into winter and that whole dynamic of stock on market changing. I know that your focus, generally about 70% of your work comes from Gosnells, which is super important to bolster off the back of the conversation we had last week with Shane Schofield from Swan View, similar price points at the bottom of that market. What's the dynamic been? We can't miss the fact that, hey, across Perth we had a 20% increase in prices.
The 20% increase was really interesting because I use Gosnells as an example. It was 36%. It's pretty scary when people trying to pick top or bottoms of markets with all this data. I was only looking when we were doing the latest market update. It had 36% for the last 12 months. But when you look at last 5 years, it's 112% growth. Yet over 10 years, it's 53% growth. So if you're trying to pick the top and bottom of that, it's pretty crazy. But
it talks to a market like Gosnells, though, right? It's heavily influenced in volatile and when investors come in and out of the market.
That's right. And it was always going to feel that way. It's changed a bit now, and there's probably more depth than it was last time. There was a bit of a run in maybe 2014. But when you start to get 70% of your inquiry base being investors, no suburb in Perth has 70% investor rates. So it's fair to say that's unsustainable. But the growth was just unprecedented, and it kept going. And then you had that anomaly where typically one's going, whether it be the rent or the sale prices, but they were both raging. And we were seeing properties that were selling for $300,000, renting for $600 a week. Now the market's cooled a bit because that same property, yes, it's gone up. It's gone up to probably $550, but it's still only renting for $600 a week. So that's where you've seen a bit of those investors peel back. And they're typically mum and dad investors. We've got a few buyers that 20, 30, 50, 100 properties around the country. But it's typically mum and dads, and they're chasing that bit of yield, expecting growth, maybe seeing what's happened where they live, Sydney, Melbourne, lesser degree Melbourne, maybe Brisbane or Tasmania. They've seen what's happened there, and they don't want to miss out again. And whilst we've had some mini starts and it didn't follow through, we always sort of felt in Perth the property prices couldn't be down for 20 years. But it was sort of feeling like that. And when you look at some of the areas, they've only just started to get back to where they were in 2006. Which you can't explain to Eastern States investors that's the case. They just can't get their head around it.
Gosnells is such an interesting case study, I think, because it is one of those suburbs that had one of the biggest falls post-2014. It had the most upside, which is where the investor pool from the East Coast recognised. They also picked Rockingham, Banksia, Grove, Kwinana, Mandurah, Armidale sort of area, absolutely flooded the market, as you saw, and instigated massive price growth. Now, if you go off of what I've been saying on the podcast and radio in the last couple of months, it should also be one of those suburbs that starts to see a softening of interest as interest rates start to fall and people start moving their interest from where they have to be to where they want to be often. And also, as we've seen before, this unsustainable market-leading growth over the last couple of years that most people start to question, hey, do we really think it can get much more than this? It's the places like Gosnells and further down on the Armadale train line, places in Kwinana, that also, unless there's been an immense change in amenity to sustain that value, the buyer pool may be the same size, but it's shifting away. That's what I posit is happening already, or it will happen in 2025. Do you agree that Gosnells is a great case study for being on the pulse for that?
I think last time, yes. Probably the difference is the infrastructure. When I look at Gosnells as you head further out from the city, the people that are moving there now, it used to be what you could afford to buy. The better homes in the area, the newer estates and what have you, it's actually people choosing to live there. It's not that cheap anymore. Like for a 4x2, you're paying $750.
That's right.
But before it was like, what can I afford?
This is all I can afford.
Yeah. So the properties that we see holding up really well, great family homes, well presented, modern homes in those newer pockets where in theory the same property 800 metres down the road, Southern River, is an extra $250,000 for the same home. They're the ones going to hold up. The ones that probably we just couldn't get our head around were the basic 3x1, haven't been touched since 1978, 680 square metres, poorly maintained, gardens horrible, and it was, again, when people were renting, they're like, well, I have to take anything. Now there's more properties on the market for people to lease. There's the choice again. So I think there's certain properties that will hold up really well, more your modern stock, your villas and what have you, because the reality is there hasn't been enough construction of that similar nature, so you're not competing with more. But the real basic properties that haven't been maintained, that have just been going for nothing short of phenomenal numbers, they're the ones that we're seeing probably more stagnant.
Well, let's segue into the stagnation. That's the first time we've heard that word in a while in Western Australia. And before we move on to that, I just want to point out that in January you were in here talking about Gosnells, giving us an update, and you suggested that, hey, we're going to get to that 550 mark. We did, which is congratulations on getting that right. We can listen
I was
to
a bit later than I thought it would be, but it did come. I just probably didn't think it'd happen as rapidly, because I'm sitting there going, this doesn't make sense. This should be happening. And what I felt was going to happen, which I think has led to that, is people that have never been to Perth, never been to Gosnells, saying, well, you know what, I paid $320, it's worth $620 now, I might just cash out. What do you think, Shane?
Yeah.
Well, look, I think you've done reasonably well, because I've seen people own properties for 20 years that haven't made that. What would you like to do? Yeah. Oh, I'm going to cash out. No emotion, no attachment. So if you get that influx of selling at the same time, which is starting to take place...
Yeah, is that, do you think, the mindset of what's been going on the last couple of months?
That is, without a doubt, the mindset.
Is it East Coast people that are cashing in, or is it West Coast people? Is it everyone?
It is 100% the East Coast that have no ties. The difference is if you live in Perth, you need somewhere to live. So selling and cashing out, where are you going to go? You're going to go up or down the ladder.
You have to trade.
But to just take money off the table where you've got no emotion doesn't impact you. Yes, I feel there is some growth left on the table, because the reality is you have to keep getting growth when you've still only got 5,600 homes.
Yeah, you can't build the homes for the people coming in. There has to be growth, but we still want to talk. If this segment bit now is us transitioning to the last part of this year and what's happening right now. You know, we've gone from 3,400 properties on the market essentially to 5,400, 5,500 now. Of those 2,000, what would you posit is the most likely percentage East Coast investors pulling out and putting their property market going, hey, I've made enough, 200 grand, thanks for coming?
Currently for me, over 50%. We've had more price adjustments in the last 3 weeks than we had last year.
So Shane said the same thing last week. He had his first price adjustment in Swan View a few weeks ago. And I asked, where's it coming from? And he said it was from our cheaper stock. It was from stuff where it was worth 300 grand 2.5 years ago. We had it on the market for 640. We ended up selling for 593. And I said, well, what do you think would have been the accurate number? And he said, we probably should have had it at high fives and we would have sold it quicker. Do you reckon that's what's going on now in Gosnells, where people are going, I'm cashing out. Let's just see how far I can push this. If I get an extra 40 going, great. If I don't, in a couple of weeks' time, we'll bring it back to 600.
Without
Is
a
that
doubt.
the same happening with you?
100%. And
that's not a bad thing, though. I mean,
it's not a bad thing.
We've just doubled our money in 2.5, 3 years.
And that's what, when you're speaking to owners, I think every property could sell tomorrow if you want to put a price that is making it sell tomorrow.
That is fair, yeah.
It's fair. But what's happened is the peak I sort of felt was maybe, when I say peak, the peak fear of missing out, the peak of lowest amount of stock, lowest amount of days on market was July.
Yeah, well, that's what the stats say.
The conditions amongst that sale which drove it to 740,000 are not the same conditions today. So yes, if you're doing appraisal and you look at the last 3 that have sold, it's easy to go, went for 740, that went for 720. But when you're putting it on the market, the same conditions are not there because it's moved so quickly.
Yeah.
Basically, the amount of stock has doubled. So it's important to have that conversation with an owner, and rather than just hacking the hell out of price, go, look, this is what the data is suggesting, but pretty quickly we're going to know where it sits because the conditions when that was sold were vastly different to what they are right now.
Now, when we
And that's crazy. It's only, we're talking 3 months, but 4 months.
Yeah.
But that's how quick it's changed.
we've all been trying to get our head around that change in dynamic of, I guess, really, there's one change. It's just that buyers have more choice. We've actually got more buyers than we had back in July.
And more transactions
because
happening.
there's more choice, right? There's more transactions happening right now because there's more choice. But because there's more choice, people have a second to breathe and make concerted, smart decisions.
Yep.
I also think people are looking forward to next year, assuming they're going to have better serviceability and going, well, if we wait a little bit longer, we might actually get a slightly higher loan and we can be somewhere better.
Yep.
So I think there's a little bit of that going on too. But for the most part, it's gone from FOMO to still there being more buyers than sellers. And that's not going to change for quite a long time. So therefore, still being able to achieve the price we want to. But if you're going to go and have a lend as a seller, you're going to be corrected pretty quickly by the market to say, hey, I do want to buy this property. I do want to pay fair price. But don't try and steal an extra 10% off me. I'm not an idiot.
It's such a funny thing because it trickles, and it gets to a point where the fear of missing out isn't met with strong emotions. It's like another one will pop up, like another one will come. When that's not the case, yes, people are going to make panic decisions. You couldn't find a rental, couldn't find a house, got to do something silly. We had people buying because they couldn't find a rental. Like these are things that I didn't think I'd ever see. So going through this process now, it's just more calculated decisions. They're not sweating on if they miss out because they know another one will pop up. It's not the end of the world. Where it felt like the end of the world.
Has been another one
Yeah,
popped up.
that's
Because
right.
7 home opens today instead of 2 to go
I mean,
to.
some of the leading agents in Perth during that 3,100 trough had 1 home open on a weekend.
Yeah.
These are some of the top performing agents over decades, like not just overnight successes.
That's not a great thing for them.
It's not a great thing at all. So I think the better agents are excited in the sense the market is changing, but we can actually guide our clients and have more upstream conversations about what we think's best for them as opposed to being so in the moment. And that's where I enjoy having conversations with people because I know the data, I know what's the trends are heading. You can sort of give them some information that maybe some of the agents that aren't as in touch with that can't do. Because selling the home is one thing, but understanding the right time, the right situation for them is where I think an owner really wants to be tapping into a good agent.
Now, there's more buyers than sellers. We know that. There's going to continue to be more buyers than sellers. But given there's more sellers than there were a few months ago because of a lot of this East Coast starting to cash in as well, the way I can characterize it is the buyer pool now has an ability to keep the seller a bit more honest.
Yeah.
And have honest conversations about what this is worth. Do you think that's exclusive to price growth going forward? Do you think that the commentary obviously is, well, there's more supply on the market, therefore there's risk in the market. But I actually am not sure that we have enough supply in the market yet. Well, the data would suggest, in my opinion, that we don't, for buyers to actually be paying less next year than they're paying this year.
When you look at some of the auction results that have been taking place, there's been some phenomenal auction results, like genuine great results that I think potentially achieve more through that process than that it would have in just a private treaty market or campaign. So certain areas definitely are seeing that. But overall, I think over the next 12 months, there'll be a more calmed approach by buyers. Sellers will be more in tune at maybe understanding there's not like mixed messages in the market. We understand it's changing. And even the areas that are getting growth, it's just calmed a bit because sentiment works across the whole market, not just one pocket. The media, these things like podcasts, all those things start to take place. I mean, last year I still remember hearing a podcast one of our clients sent me who's basically doubled their money saying that Perth was going to fall in a heap. I just can't see how you can see that from over there when...
Well, that came from Melbourne, I'm sure.
Well,
I'm pretty sure I know exactly who that guy is. And Instagram people aren't my favourite type of property experts.
So, yeah, when you hear those sort of things, but people do listen. They do take note. So,
especially the East Coast investors who have been a big part of the increase in value.
Yeah.
They do have an impact.
Yeah. Oh, they do. And the buyer agents. I mean, we would deal with about 80 buyer agents.
They tell a story.
Yeah. And where they're moving right now, I guarantee that market is moving.
Yeah,
now, that
they're
might be
shepherds.
Darwin. That might be
for the sheep,
100%.
essentially. Yeah.
And look, some of them have done phenomenally well for their clients, but there's like a heat map almost.
But I characterise them, Shane, as not people who are actually smart investors. They're more locusts that go around just plaguing certain markets at a time, inflating up their own markets by being in that market for a time, and then they leave. And the question really is, to what extent does that have a material impact on the market? Well, clearly it's noticeable. We've got more people selling, but it's not to the extent that it actually impacts the dynamic that we have in Western Australia right now, which is that there are still more buyers than sellers. There's still more people that need homes than there are properties being built. And that's not going to change going forward for quite a very long time in terms of capacity. So I think what it means going into next year is that there's less FOMO about the market, but there is still, very honestly, a dynamic that requires price growth because there are still going to always be more, generally, on average, be more people bidding for a home than there are homes.
If we keep just pushing it too far, where that gap between the market right now and what the new price coming on is, taking that momentum out of the market, that's when you're going to continue to see average days blow out. I personally think real average days on market will probably be around 25. Data suggesting it went from 9 to 13, but that's probably data from July. I just feel it's probably in the mid-20s because the first 2 weeks some owners are going, well, let's try at that.
Yes.
And then we'll go to the price that you probably told me.
That's
and then it
happening
sells.
so often at the moment, I think, because
And
people are
it's-
still thinking that they're selling in July and that they've got a mate who just made 100 grand more than he thought he would. And that's still a reality, I think, in those upsizing markets and downsizer markets. But we're speaking specifically to someone who sells over 100 properties in Gosnells, and that's where that inflection point is right now, I think, is in that market where we're seeing that become less of a reality in that point. So the follow-up question I have to you as licensee of an agency now that's not just in Gosnells is, where is that buyer pool going next year, Shane? Because it still exists and it's buying at a rate 20% more than it was in winter.
The school zone thing hasn't changed. I just can't see that changing. When I look at some of the results for areas like Willerton or Applecross, these sort of, it's just nothing short of phenomenal. They're just paying the right money. And like Michael Jennings from our office, they've set basically a record followed by another record in conditions that were nowhere near what they were not that long ago. But the buyers understood what they needed to do and what they needed to pay, and it's just accepted. It's really interesting when you go through different areas. So I think you're going to see still a lot of upshift, like people trying to get into an area that they've always wanted because maybe their, let's say, property in Willagee has gone phenomenally well. They can finally get into Bicton, just for example.
You've been listening to my podcast, Shane.
I do listen, but if you said that, apologies. But it makes sense now. Why not? Because
this is the time. Because you finally, there are so many people, Shane, I'm sure you've seen the real life examples, especially in somewhere like Gosnells, where people have gone, no offence, but I didn't think I'd have to be living in Gosnells, mate, but this is all I can afford. And now they've gone and made 200-300 grand in the last couple of years, and like, well, maybe we can now use this to get into Canning Vale, where we wanted to be for the last, when we grew up.
Or Rolly Stone, or these areas where you're getting some land. I actually spoke to someone the other day who paid $280,000. I still remember he was a Key Start buyer, and he was like, I don't know whether to buy a home or go on Kentucky. I was like, mate, look, if you need a house, you should probably look at it. So he had the 2% thing. Got in, he rang me about 8 months ago. He's like, mate, look, I've just seen this house in Mandurah. Big shed, absolutely love it. What do you reckon mine's worth? Like $450. I was like, I'd probably get you $650. He's like, no, not per week. I said, no. And he goes, mate, you get me that. We sold it that week. He's like, Shane, I never dreamed. I was like, mate, imagine if you went to Kentucky. It would have been the most expensive trip of your life.
This is fantastic.
But he's got a fantastic result. I guess good thing for Key Start. Some people go, Key Start rates, whatever. Any avenue to get into the market, it's been life-changing. He could have kept renting. And funny enough, some of those people, kid you not, that I've sold properties multiple times now, there's some tenants, and I still remember them saying, why would I buy? It's cheaper for me to rent. There's still tenants in the same properties that were going for 250, 300,000. They're now 650. I think I remember saying, it might have been on your podcast, this is the second or maybe even third chance people have to get into the market. I don't think it will happen again. I can't ever see it going back to what it was. So the last 2014, it felt like everyone buying was mining related. And then when everyone was selling, it was mining related. The people coming to Perth that are moving here are young families, basically. They're here to work. They're here to work. They're earning more here typically than what they would where they're from. It's less affordable, not unaffordable. And I genuinely believe some places in around the country to have undesirable properties, they're paying double what they are here to be 10 minutes from the beach.
With the same income or less?
Same income, but typically more. All the fair bit we're getting, Shane, I moved here and I've had a 20% increase on my income for whatever reason. And you know what? I get to go home. I go home once a quarter for $380 or Qantas maybe $750. But it's not that far. So if one thing COVID did, we felt like we were sort of separated. The amount of families that are coming and going, their families coming over, spending a week with them. It's really connected. The country got opened up because of COVID, even though it felt like we were segregated. People actually now understand it's not that far. I think right now is the window that you can still get into an area you'd like to be. And it might not be your final home, but it's a home. And I think if you can get into the area you'd like to be at the moment, get your foot in the door, it'll give you the avenue to potentially get into the next suburb and so on and so on. But to not get in now and think you're going to pick the top or the bottom, the reality is 5,600 homes is realistically 10,000 under what it should be. So don't wait for that. Like, I genuinely believe there's some growth still ahead.
But why do you think it's a window right now? What's happening practically on the market right now where it's actually a good time now versus 3 months ago versus 3 months from now?
There's sentiment that buyers are saying to us, oh, the market's turned. And you're like, guys, it's still doubled in like 2 years. So it's turned. Average days are still relatively low.
Lower than any other time before.
That's right.
Just
so
not lower than it was in
they're
the winter.
comparing, it's like saying today is 44 degrees, but it's not as hot as 50. It's still hot.
Yeah.
But you're just comparing to when it was a record, and so even if it gets to 32 degrees, it's still a warm day. But you keep comparing to something that's never going to happen in our lifetime again.
Yeah.
And we get people coming through second home open. Oh, it's been on for a bit. No, it's just you've been every night looking on your phone, and it hasn't gone under offer in 5 days. So it's this sort of sentiment that people are probably fooling themselves thinking it's not that great a market. It's actually still a great market. It's a seller's market still, but there is an opportunity for buyers at the moment where there's I feel there's a tiny bit of a lull, a bit of mixed data because some areas are going great, some aren't. And I think if you can get in and ride that wave, because it will eventually get back up to 12 to 15,000, that's when you'll start to see a more balanced market. But I generally feel there's growth ahead.
Well, to get to 12, 15,000, it won't be at this price point.
Well, it's impossible. It can't.
But yeah, that's the economics of it. Yeah. So for me, I likened it to having a chicken in the oven at 240 degrees. You're burning the hell out of it.
Yeah.
And we've dropped it to 230 degrees, and the chicken's going, it's cooled down.
Yeah.
It's like, mate, you're still burning to a crisp right now.
That's right.
Right?
Yeah,
that's what I think the reaction has been in the market, which is just it's laughable nearly that people are suggesting that, hey, it's cooled, it's going down. Because it's gone from 240 to 230, it'll be 180 next week.
Yeah.
Hang on a sec, mate. Let's just be realistic about what it takes to get to 180, to get that temperature and therefore that price down in this market. And those things actually aren't happening and can't happen.
Not that quickly.
Exactly right. No, they can't happen that quickly. For them to happen that quickly, we literally just have to magic 20,000 homes into the urban fringes tomorrow, or 20,000 new apartments just pop up tomorrow.
Yeah.
That's how you get it to 180 and have a balanced market where you're cooking a nice roast chicken for Christmas.
And that's even when we're speaking to owners and they're like, I really thought it'd go for 720. I was like, guys, you paid 450 18 months ago. If you get 690,
that's still
you've done phenomenally well.
Yeah.
But
that's the discounting you're doing right now.
That is the discounting, but it's still like you didn't double your money, you made 90%.
Yeah.
Like, you're actually thinking about that conversation. And what I often say to them, I say, guys, like that young guy I was talking about, they go, I only made 150 grand. I was like, well, how much did you put in? Oh, my deposit was 50 grand. So you actually got 300% on your money. Because the other bank's money, we're not talking about. Your 50 grand, you've made that.
That's better than Bitcoin.
It's phenomenal. But they keep talking about, I only made 100 grand. Well, you've got to think about what you put in and what you got in that time frame, which is also something really important.
Now, you spoke about a window that leads me to believe that there'll be a time where you think that gets harder again for a buyer. Well, is that because you think there'll be more competition sometime early next year?
I genuinely think there's going to be more growth in certain areas.
Where are they going to be? You spoke about obviously school zones and all that. Would you agree with my position that it's going to be further up the price points?
It'll be further up the price point, but in order to get into those price points eventually, you need to get your foot in the door. Now, if we put something on the market tomorrow, I think when I last looked, there was only 90 properties under 400,000 on the market in Perth, give or take, which is pretty crazy. Those properties, I think, will continue to grow because the reality is a villa, just for example, will cost you $350 to build. So when you see one for $450, regardless of where it is, I think that's going to grow. And then you've got this section that wipes out, I would say, between $550 and $950, where you've got a bit of a mix of investor, and that's a bit all over the place at the moment, depending on the type of property. And then you've got the upshift. So if you sell your home for $750, that next stage, which reality is with the median house price of $730, most things are that or above. That next step up is where I think you're going to continue to see growth, because obviously most people couldn't be buying at 950 to 1.2. The reality is everyone selling in that price point now has to go somewhere.
Yeah, and they've got the equity now.
Yeah.
And the big thing that I've been pointing to, which you haven't touched on yet, is interest rates. People who could afford 750 this year, you drop a few basis points next year, now you can afford 900. And I think that's where that's going to be the impetus for our pressure next year, is that we still are in what a year and a bit ago was deemed the hottest market we ever had, and we're still at that
and in
point.
the country,
in the country, right? And then you drop that interest rate from the highest it's been in a decade, it starts to make people artificially richer, and it's just kerosene on the fire.
Yeah,
you're throwing kerosene in the oven at the same time.
So probably the one thing, now obviously I don't work the RBA, but the buyer that can't afford 950 is still going to go and spend 850. It's just they might not be able to get the home they originally wanted. I think now if they do pull back, they probably start to get what they wanted again. But the money was going somewhere. They were buying, like 1,000 transactions a week was still happening.
Yeah, and that talks to our population growth side, which is the fundamental to all the conversations we have, which are all nuances to that. The fundamental is we're brought in another 90,000 people this year. They need 45,000 homes. We only built 17,000. So the pressure goes to the established market.
Yeah.
And that's what's happening even at the places that we would deem to be the lower amenity places. All that's happening now is there's going to be a shift from, as I've said, access and affordability over the last couple of years to amenity, because they can, because you always will if you can.
Yeah, I guess that's probably the anomaly I was saying with area like Gosnells is it actually is, when you start to think of it, not just Gosnells, certain suburbs, they are relatively close to great infrastructure.
Let's do a look, if you can, to Gosnells specifically, because that, again, will be a bit of a temperature gauge for us next year, because it's either going to prove all the haters right and it will drop, because that would be the one that will drop, given how much it's gone up, or it's going to demonstrate that, hey, fundamentally in this market, along that housing continuum of affordability, everywhere in Perth is going to grow again next year, and therefore Gosnells will be one of those. Where's Gosnells a year from now?
I think
you
it will.
saw 37% last year.
I'd be surprised if there wasn't a registered growth of still around 10%. And what I think is that more the realisation of those properties, because it is below the median house price in Perth, those villas and what have you, they're still hot to try. You bring that on, you get smoked.
Yeah, they're still pressing up from the bottom.
Still pressing up. So until that construction starts, like a 2015 villa is...
the newest you're going to get.
Yeah, that's right. So I actually think you'll see registered growth, but it's important you buy good properties, and the ones that were pretty terrible but you're still paying a premium, they're just not going to walk off the shelf anymore. So I expect registered growth, but if you think it's just going to continue for every sort of property, you do need to be more selective in what you buy now.
Bonus question, just out of interest really, are you seeing any small-scale infill happening around your neck of the woods? Because it wasn't really happening at the start of the year because the price of construction was a bit too high still.
Small subdivision that the developer have had since 2005, they've just pushed the button on, like they're going for almost $1,000 a square metre in Gosnells.
Anyone building on those?
Yeah, no, there's 6 left. Sold out in 2 weeks.
Yeah, wow. Okay. So there is some construction happening.
It is, but that's the appetite. So that's a 350 square metre block. They're just getting absolutely smashed, which is why when you start to see those 4x2s built in maybe 2006 to 2015, really well maintained, going for 750, they're going to hold out well. If they're well maintained and they present well, owner-occupants will love them. As an investment property, well, the reality is you need to be getting a higher return.
Yeah, you'd be at $800-900 a week to be able to afford that or justify that.
Yeah, so the investor market there is probably not going to be the one that stokes it up. But the owner-occ is probably that young family that would love to be in Southern River, Canning Vale, Harrisdale. They can't.
Parting comment, Shane, for 2025. Advice to the market as buyers and sellers. What would your thoughts be?
Try getting the area you want to be in and can afford to be in as best you can. I'd be surprised by the end of this financial year if there's not 8,000 or 9,000 properties on the market, which is still an undersupply. I think there'll be still registered growth, but you can be a bit more selective as a buyer of the type of property you're going to purchase. And I think more than ever, taking that extra bit of time is really, really important.
Perspective on growth and what we've had in the last couple of years?
It was overdue. If you look at it in a small sector and say 20 or 30%, but break it down over 5 years, it's actually not that unbelievable. But when you look at it, I guess in that macro, that moment, it does seem crazy. But I think it will start to become the new norm of 10, 12% in most suburbs. I think is manageable, and I can see that still being the case.
And absolutely still a fantastic year of growth.
Which, well, you can't save that. No. That's probably the thing. Like, you can't save that. Typically, you can't save that. So to get in, Enjoy WA. The amount of people moving here, they're choosing to live here, I think it's only upside.
So par for the course, 1% a month, 2025.
Yeah, it'd be nice. That'd be great for everyone.
Yeah,
It's
I
fair.
think
That's fair and reasonable.
Very much achievable next year. If we're doing more than that, I'd be surprised.
Yeah,
if we're
yeah.
doing less than that,
Yeah.
you'd have to demonstrate to me a fundamental reason why. Thanks, Shane. Have a great Christmas,
worries.
mate. And to everyone out there listening, thanks a lot for a fantastic year. Have a very safe and marvellous Christmas. This is about the best time to sneak a deal right now if you're a buyer, because everyone else is sleeping except for Shane Beaumont, clearly. If you're looking for that house, do not switch the phone off right now. That next 2 weeks is, I've found historically, a really, really great time to snag a property under everyone else's nose.
Thanks for having us in.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!